Welcome back to the AAIS Pulse. I'm Robin Westcott, and I'm here with your new regulatory brief. Today, we're going to throw the spotlight to one of our newer commissioners and from the great state of Maryland. Thank you so much for joining us, Commissioner Kathleen Birrane.
Thanks, Robin. It's a real pleasure to be with you today.
So, as we were kind of chatting earlier and some of the things that we've done, our backgrounds are a little similar. We're both attorneys, but you also have some private sector and public sector experience. For those people joining us today who might not know your background, let's start with just talking a little bit about how you got into insurance and your background from moving into the department.
Well, that's an interesting history. I guess to some extent, I would say I had a very early introduction to insurance regulation because my dad was a Maryland insurance commissioner. He had been the deputy commissioner for several years and then insurance commissioner. So he was in what was then the division of insurance for about a 10-year period. Notwithstanding that, when I went to law school, the last thing I was interested in was insurance. So I started out at a regional law firm, really doing general, probably complex federal litigation, our firm, but eventually really got sort of pulled into insurance-related litigation. First, kind of complex coverage issues around long-tailed tort and environmental litigation, and then moved from there into sort of some of the regulatory work. And I had occasion to get to know then Maryland Commissioner Steve Larson in the early 2000s. And when my dad got sick and passed away, he and I never practiced together. I wound his practice up because he was essentially a sole practitioner. And in the course of that, I guess got the insurance regulatory bug. But in any event, Steve Larson asked me to come over and be his principal counsel. I did that for 5 years and then went back out into industry and then eventually private practice. And my last gig, if you will, before I came here to the Insurance Administration as commissioner was as a partner at DLA Piper.
That's I started in the Department of Insurance back in the early 90s. And like you, I didn't have practicing law. I didn't think coming out of law school that I was going to do work in the insurance industry. And I actually ended up with a temp job at the Department of Insurance, what was then the Department of Insurance in the Division of Liquidation, Rehab and Liquidation. And, I met some really great people through that experience. You probably know Belinda Miller, Commissioner McCarthy, of course. And, just a bunch of folks that were really encouraging and really instrumental and influential in my decision to stay in this area. It was a fascinating area to me, and I'm assuming you kind of felt the same way. What were some of the influences or maybe some of the specific things that happened, as you were exposed to that you went, wow, that's really cool. I want to do that.
Well, I am a true insurance regulatory nerd. I mean, I find the subject matter infinitely fascinating, really across all areas. And, as a lawyer, there's really no area of law that doesn't really touch in some way on insurance because, I come at it currently from a regulatory perspective, but, whether it's administrative law, contract law, constitutional law, property law, all types of issues that come across your screen and that insurance companies and therefore insurance regulators have to deal with. And so in my practice, it's so broad, it gives you such depth. So it's infinitely interesting and intriguing. And that's particularly true, as we look at a world that's pushing innovation. So you are never bored at any moment in this. There's always something new and different and exciting that brings all your skills to bear. So that's the industry itself is a source of sort of intellectual joy to me every day. But as far as people go, I mean, obviously there's the example of my dad. And, I think one of the sweetest, perhaps bittersweetest moments of my life was repeated. I've had it occur twice. The first was when I came in as principal counsel and I sat down and we were in the middle of the MIA was in the middle of a complex Form A review about whether its large nonprofit health plan should be allowed to convert to for-profit status and then become acquired by another entity. And in the connection with my like my first week in office, looking through some of the materials and the historic regulation of that nonprofit entity, there were orders that my dad had signed. And so it was very intriguing and interesting, kind of fun to see that. And you know, today here, every once in a while, you know, I stumble upon something. I've had counsel, I sit as a hearing officer, among other things, at the MIA. And I've had actually people cite to me things that were orders that he signed or opinions that, you know, he had authored. So that's always a nice sense of continuity when I get to kind of encounter him and walk a little bit beside him. And then I've just been very lucky, you know, with mentors in my life. You know, my former law firm, Cremon and Graham, which is a regional firm in Baltimore, probably had some of the best legal minds that you could possibly have there. And Al Redmer, who was my predecessor here, he was my second commissioner when I was principal counsel. And he is just an absolute gem of a person, wonderful guy. Has done so much for Maryland consumers and for companies in Maryland. And I stay in close touch with him, and I value his judgment. So I've had many, many guides along the way. You know, at DLA, you and I have a friend in common, Peter Rice. You know, Peter's amazing. So really, Stacia Kelly, you know, who really has always been a real innovator and a real path leader, and has done so much, particularly for, you know, women in the legal profession. So I've been very, very blessed.
Yeah, I had a similar experience. Not only did I have a great female role model in Belinda Miller, but I had many male co-workers or supervisors during my career at the OIR, again, including Commissioner McCarty, who I just learned a lot from about how to handle situations, and not just the practice of law, but really how to understand and talk to people. And try to get to their level. The CFO at the time that I worked for, Jeff Atwater, all people who really brought different perspectives. But I learned a great deal from Dennis Threadgill, who was my first chief attorney. He put together an ensemble of actually female attorneys in his office. So I really came in with a structure around me and really great guidance. And some of that is, you know, you made a great argument earlier, or a statement about insurance is really interesting, and we have to make sure that we're able to communicate that to newer generations and have them have the expectation that this career can expose them to many, many different things, including new technologies, which is something I've kind of transitioned to here at AAIS. But, you know, part of the things that, one of the things that I found very interesting in reading the materials for this interview is the work that you're doing around education and workforce initiatives. So I'd really love to have you talk a little bit about those, about what you put forward in the state of Maryland around penetrating down into high schools, into colleges, with programs for inclusion and introduction of what a great area insurance is to be in.
Sure. Well, so again, my predecessor, Al Redmer, had an experience where he was at a large insurance agency in Western Maryland, and they were talking about talent development and recruitment. And this agency noted that they got their interns from Temple University because there were no risk management type initiatives, programs within any of the Maryland schools. And so given that, one of the things that Al and his team at the time did was open up and begin to develop this workforce initiative. So what that culminated in eventually was the development of a degree program at the University of Baltimore, in the city of Baltimore, that is focused on risk management. And so that has been terrific, and that program has really taken off, and it will really be a sort of a shining star in making sure that we have the talent that's necessary to fuel the workforce and insurance in this state, because it's an aging population. And, one of the things that we look at statistically is, sort of how quickly people are aging out of more senior spots and the need to develop more talent in order to fill that gap. So the University of Baltimore program is going to be great with respect to that. In addition, what Al initiated was the development of a sort of a council, if you will, a consortium. We have a gentleman whose job it is to work with community colleges and high school using the INVEST program curriculum in the high school areas to bring together folks and sort of gear them toward insurance careers. And certainly that focus has been primarily, I would say, on the more traditional sales pathways. But what we've branched out, so since I've come, what we've added to that really solid, strong foundation are two things. One is to, in our conversations with colleges, community colleges, and high schools, is to begin to broaden the band in terms of the types of jobs that are related to insurance. Really, there's almost no profession that isn't related to insurance in some way, but it's opening people's eyes to those connections. So, when I talk to colleges that have a nursing program, I talk to them about the fact that in addition to med-surg nursing, nurse practitioners, and all these other wonderful opportunities, there are nurses play vital roles in the insurance industry. In reviewing, records and making decisions on the spot, making pre-authorization, working with families in hospital settings. So there are careers there. If you look at engineering, huge careers opportunities with insurance companies. So, it's so spreading the idea of what is the business of insurance and what kinds of jobs are there in insurance outside of the ones that we think of most commonly. But the second area that we've begun to move into is then looking at how do we pull together a council of some of the largest writers of insurance and other industry players, and really bring them together to identify the best opportunities that we can have, and then couple with some of our state institutions to really drive innovation. For example, an Insurtech accelerator in the state. And so we've been on, it's not quite ready for prime time announcement, but we've been working on this council and the development of a wonderful group of CEOs that are growing. And if any of your members are interested in reaching, and joining us, reach out. We'll be happy to talk about that. But we're looking at pairing with two institutions in Maryland that will help improve diversity in the workforce, and developing curriculum around some of the sciences, right? So if we look at, where's everything that hot? What's hot right now? Data science. We need more actuaries, the actuarial sciences, computer sciences. So all of these issues around data and how data is used, and the complex analytics and predictive work that's being done, and the need to protect against, bias in that process. Where should we be with that? What are the think tanks? What are the institutions like a Morgan or a Coppin that we really should be focusing and developing a next generation of people within those sciences, but also incubating ideas? So that's what's kind of next on the burner with what I call Redmer 2.0. So building on what Al did.
No, that's great. We have had the same journey because we're a smaller organization, but we consider ourselves a modern advisory organizations. And a couple of things we've done kind of on that front is we very much utilize talent and have an internship program that's very active at AAIS. It's been, we give interns real work. We're too small not to really leverage their talent and their time. So we have some great internships available throughout the organization with our actuarial staff, with our data science staff, with our technology staff. And so we try to utilize that as well. One of the areas that's been very interesting for us, and for me, coming from state government as much of my career, has been a real change around and really understanding project management. At AAIS, we work Agile, which is kind of obviously a methodology for project management. And one of the pivots that's been interesting of bringing in a different background or resource has been on our product development cycles. We're starting to look at people who really, instead of having the very in-depth insurance knowledge, because quite frankly, it's harder and harder to find, but also things change so quickly, right? Coverages move so fast now. It's hard for someone that doesn't have 30 years of experience to jump into product management and be able to manage larger scale programs. And so for us, we've actually turned to more of the project management skill through Agile. We have Scrum Masters in-house. And so a different development cycle. And some of the folks that, our recent hires have really been more around the project management skill and have Agile skill than they necessarily do a rooted insurance skill. Insurance, we can learn. What's harder is to be able to take that knowledge and now pivot into the new technologies and move faster in deployment and development. And the Agile process really kind of helps us do that, helps us to try to do that. I think that's going to be important for insurance companies to look at, especially in incubating new insurance technology. That's going to be a place that, well, I think we'll have to see some change in structurally in how insurance companies do business. And I think that's going to be important for the insurance commissioners. One of the projects in your state has been active or worked on this was around our blockchain initiative around OpenIDL. Another example of we really have to start learning how to do things differently. Using the same 30-year-old technologies around data, for example, is not going to move our industry forward. It's not going to attract the new talent that we really need to come in and start to move our industry forward from a technology perspective as well. And some of those things is technology at the NAIC level. And although you're a newer insurance commissioner, you certainly have a great deal of background. And one of the areas that you've become active at the NAIC is around the climate and resiliency working group, where you're a vice co-chair, I think, and looking, I think, maybe on the solvency risk side. Can you kind of start to talk to us a little bit about your work there on that working group, what you see? You're probably in the same place I am in the solvency track, which is part of my responsibilities at OIR was around the solvency regulation, which it's these are great things, and we want our insurance companies to have good coverages, but they have to remain solvent to do that. And addressing these new risks are going to be hard for everyone.
Sure. So, as folks may know, Director Farmer, who was the president of the NAIC in 2020, really elevated the NAIC's historic work on climate to an executive level task force. So, the NAIC has been engaged in evaluating climate and climate risks for a very long time. We all know Commissioner Kreidler from Washington certainly was a great leader in that area. And so, but Director Farmer accurately noted that it really needed to be at an executive level, and it needed to be a critical objective of the NAIC. And so Commissioner Lara from California joined with him, and the two of them are the co-chairs of the task force. The task force is split into a number of work streams, one of which is solvency. And as a co-chair of the task force, I oversee the solvency work stream. And what we're focused on is really looking at the financial impacts of climate changes on insurers. And, we spend a lot of time talking appropriately about underwriting risk. And insurers are adept at evaluating, at least and particularly on a short-term perspective, the risks that are inherent in certain perils, cat models, et cetera. And what those perils are and what gets modeled are constantly expanding and exploring. But climate change is different in that it brings a whole different set of risks that we don't necessarily traditionally think about, from everything from reputational risk, litigation / liability risk, to what is usually referred to as transition risk, which is really what is the risk inherent on both sides of the balance sheet from a world that is moving away from fossil fuel and is looking at decarbonization, driven primarily by government action, but also by coming together of a lot of businesses, including insurance businesses, in order to get to a net zero world. So those transition risks have to do with looking at, kind of the impact of climate on the value of assets and assets over time. And it also has to do with looking at what are we insuring and how are we insuring it. And, you have both internal pressures from companies, you have concerns from shareholders, you have concerns from regulators, and frankly, regulators and government agencies that really aren't part of the insurance world per se. So as you begin to look at all of those shifts and changes, where are we in our ability to identify those risks and begin to evaluate them, first qualitatively, but then eventually quantitatively? So the evolution that has been occurring outside of the US and the international community has been looking more in a more detailed fashion at those risks and beginning to put in some regulatory requirements about assessing those risks, beginning to measure some of those risks, certainly in connection with disclosures, a robust disclosure environment. There have been some good things that have come out of that. There have been some hiccups and some lessons learned. And now as we look at the US playing field, while we have long had devices like ORSA, et cetera, that look at and report on risk, and CGAD and our financial examiner's handbook, and the way in which we focused on not climate risk as a topic, but risks that are climate related that are baked into the analysis. But the goal here is to sort of ask companies to begin to step back in a proportionate way, depending on the size of the company, location, their line, and begin to really think about, as regulators, what do we want companies to begin to be focused on, and how, and to what degree? And so what my work stream has been doing is doing kind of a deep dive into risk, into metrics, into what other groups are doing, what industry is already doing at different levels, what regulators are doing. And having kind of gone through that process, we are now about to embark upon a set of closed regulatory meetings where we will be, as regulators, looking in a very detailed way at all of the traditional tools that regulators use for financial surveillance, deciding how, if, and how they need to be tweaked or developed. This will be an incremental process, of course, in order to have better information and guide companies into how to look at elements of climate risk beyond underwriting risk. Once we have those internal sessions, we will be putting out a set of recommendations that will be vetted at the working group level. And then eventually we will carry that up to the task force for the task force to review. The recommendations will really be in terms of referrals to the letter committees and other groups that specifically address each of those tools. Like, for example, the financial examiner's handbook, we expect there will be recommendations about maybe additional and more detailed questions that might come in context of the financial exam. So we work very closely with the other work streams. We work with the disclosure work stream. We work with the modeling work stream, the innovation technology work streams, to try to be as coordinated as possible, because our goal is to make sure that companies are moving in this direction, recognizing that there is a very broad sort of band in terms of people, like where the size of companies, the scope of companies, the capabilities of companies, You have some of the very, very largest carriers who've reported to us and what they're doing in very sophisticated ways across all of these risks. And then you have monoline companies in a single state that really don't have the same resources. So we will be keeping all of that in mind, as our goal is to get this conversation started and get reports beginning in all of these types of companies.
As you move forward in this initiative, and I think this is a very important and very well said in the statement around understanding risks that are affected by a climate or change in climate. And at the end of the day, it doesn't really matter what you believe about the causation. We see results, right? We see results in what's happening around the country. And that was one of the things that I thought was important as I've watched it. My career kind of started, and they actually needed someone in rehab and liquidation because it was right after Hurricane Andrew. We learned a lot of lessons, right, for us about risk and about exposure in our state. And then I was actually at the department in financial oversight when right after the 4-storm season in Florida, and that emergency rules and trying to deal with this. And again, it doesn't matter the why at this point and how we change that. One of the most important components, I think, is how we respond as an industry to the change in risk. And there's so many other instances of change that aren't necessarily climate related. And one of them, and you've also been active around, is technology. Just the change and I once saw a graph, and I actually used it a couple of times, I think, in presentations around the acceptance of new technology and how, it took decades before every home in America had a phone, just a rotary phone. It took decades before they had, in some cases, electricity. And then you start to see the curve. It took a lot less time for people to have a microwave. It went down to, okay, it's not quite that long of an acceptance to new technology. And then you have something like the smartphone. And if you look at the acceptance of smartphone use, in less than a few years, you had that curve go completely up, right? We've accepted, we use smartphones, we do things on smartphones that we would have never dreamed we would have been able to do. I doubt, Steve Jobs didn't ask anybody, what do you want your smartphone to do? Because there just was no such context that we could put it in. So we also see that kind of change in the insurance industry for technology. How do you see some of the work and the work screens that are going on at the NAIC around technology and how that's, I think the same way, very rightly, being addressed at the regulatory level, simply because we need the regulators in sandboxes and experiences that we can try new things. We need you along with us, right? The companies need the experience with you to make sure that we're accepting things on every level. So what are some of the things that you're interested in or you're involved in around technology?
So I would say what comes first to mind is the e-commerce working group. So, what technology does is it accelerates the speed at which things can happen, and it facilitates activities. So the digitization of things, the ability to transact virtually and through electronic media, the ability to abandon and get rid of paper processes, all of these kinds of things that speed the transactions along. I mean, there are many other things that technology does that we can talk about, but just the sheer use of technology as an efficiency tool that allows things to occur in a more efficient, effective, rapid, and frankly, consumer-friendly and accessible manner. And whether that is drones that fly over your house after a storm, so that nobody has to climb up on the roof to actually show what the damage is, or at least narrow how much physical inspection, live inspection there needs to be, or whether it's the ability to take photos of your bumper and send that off in order to initiate and have a claim paid, or whether it's the ability to go online and from start to finish, to be able to secure your policy in real time is a wonderful tool. We learned during the pandemic how critically important technology is to keeping everything moving, from health visits, through telehealth, to being able to continue to transact business as insurance companies, and frankly, as insurance regulators. I mean, how dependent on technology were we in being able to come into companies in order to continue our examination processes? So it's everywhere all the time, and it's good within constraints. And so the e-commerce working group was created under the Innovation and Technology Task Force this year in order to really evaluate where it is that there are artificial barriers to the efficient use of technology in order to transact the business of insurance. And sort of the impetus from that, I guess, kind of came out of our experience with COVID, because, we had to suspend and relax lots of requirements. So, we were able to, allow what were sort of statutorily mandated paper processes to be done electronically, and then nobody wants to go back from that. Everybody wants to be able to continue that. And, as emergency orders and the kind of, legal, things that allow us to suspend some of those statutory requirements begin to go away, how do we compensate? In Maryland, one of the things we did, the Hogan administration, of course, this has always been so forward thinking in terms of technology and keeping Maryland open for business, is that we were able to get legislation that allow me as commissioner to, at least where companies are concerned, to, in any instance where there is something that is required to be in paper, I can now do that electronically and require back and forth my licensees to me and me to my licensees to be done electronically. And companies, for the most part, love that. So it makes everybody happy. So what the e-commerce working group is doing is saying, okay, let's look at this and see where is it that there has been a lack of uniformity in the adoption of the model laws. Let's look at how perhaps some application or interpretation has made the ability to use technologies broadly across different states more difficult. Let's look at places, let's get really concrete examples of where companies are impeded in their ability to work effectively with their consumers or their regulators because the demand for some sort of a paper or manual process and or a hostility to the use of technology. So that's the job of the e-commerce working group. But what we're going to focus on are a series of presentations around the legal framework and environment, but then also the practical issues that industry are experiencing. And the job of the work group is kind of bucket things around, what's the low-lying fruit? These are things we really should be able to address with states in a pretty straightforward fashion, because it looks like, there is maybe an interpretation issue, and then other maybe more complex issues that might result in a white paper or might result in a model bulletin. So that's the direction we're going in. But that's the thing that comes first to mind in terms of my work at the NAIC with regard to tech issues. Obviously, technology and the use and the crunching of data and predictive analytics and modeling bring with it a whole host of other concerns, which are addressed in some of the other committees that I'm involved in, particularly as it relates to the potential for bias and prohibited factors to kind of potentially creep in to whatever the decision is as a use of perhaps not properly trained data or algorithms that change through machine learning where those biases are not picked up.
Yeah, I think that it's really important that even in smaller and mid-sized companies who have maybe not traditionally had focus on some of the activities that are happening at the NAIC level, that they do pay attention. And I do really encourage companies, if they have an interest in collaboration, especially around working with you and the initiative in Maryland, to bring new talent and diversity from perspective of employment and from just in the insurance industry itself. This is all works together, right? And most of these issues cannot be separated. There's never, and that's what's hard, because you have to make sure that you have a balance for larger companies and smaller companies, a balance for the privacy rights of individuals versus how do we make good policy decisions using data from some of these resources. So it's all a great balance. It's all something that we need to make sure that we're talking about with our regulator, and that we are creating other places and other spaces that we can go. The NAIC is a really great collaboration of insurance regulators. And it's really great to see the regulatory community starting to reach out and showing interest in the collaboration space with the companies. And that's one of the things that we've been working on as we transitioned our Open IDL network over to the Linux Foundation, one of the largest open source software communities in the world, is that there's infrastructure. There are things that are common to all of us, both carriers and regulators, and we need to work together on solving some of these problems and building some of this infrastructure. There's nothing wrong with what's going to go on top of that infrastructure, as far as we understand that, companies and Insurtechs and others will have great innovation and ideas that will be profitable. There's nothing wrong with that, but we need to work together to make sure we have a common ground, common understanding, common infrastructure to support all of the new things that are coming into our industry. With that comment, I'm gonna close this up and finish up here. Commissioner, I really appreciate you coming on and to the AAIS Pulse today. Is there anything else you'd like to just take us out with today?
I'd just like to say thank you. It's been a pleasure to be able to spend some time with you and with your members. Maryland is open for business. We hope you're doing business in our state. If you're not doing business in our state, come knock on the door. I'm happy to talk to you. And my door is always open. So if you have innovative ideas, don't be afraid to come and talk. I mean, that is the most important thing. And I think as you're developing new technologies, new products, new designs, etc., the most important thing that you can do is kind of get regulator input as soon as possible. And so please feel free to use us as a sounding board. We're always interested in new ideas. And I am definitely going to follow up with you, Robin, with some of those internship and apprenticeship programs, because we'd like to see some of our Maryland students take advantage of those. So thanks for telling us about that.
Thank you. We'll be glad to have them.